We have a couple of managements. Let's talk about Tejas Networks. That stock actually is trading with deep cuts after a weak first quarter. The revenue declined nearly 90%. And, it was quarter on quarter. We saw the company post a loss of nearly 200 crores. Arnob Roy, who's the COO and Executive Director, as well as Sumit Dhingra, who's the CFO of the company, joined in. Arnob, Sumit, thanks a lot, gentlemen, for joining in. The street obviously visibly disappointed by the numbers that you posted. The stock is lower. But what we want to understand from you is how much of this quarter's performance was a one-off? Because you have alluded to a couple of challenges that you all faced during the quarter, a couple of things that have moved into the second quarter. Some of the things that were happening in the first quarter will be reversed in the second quarter. If you could just put a number to that, had it not been for those one-offs, how would the numbers look? And going forward, what is it that you're targeting? Let's start with Arnob. Arnob.
Yeah, so thanks for having us. So first of all, I think we wouldn't like to give a guidance on what the numbers would be, but I'd like to really set the context of what this year and the quarter and the subsequent quarters are going to be. So first of all, let's see. We came off in FY25. We came off on the back of a really large project, this BSNL 100,000 sites, which we had to deliver in a very accelerated way, and that kind of resulted in a huge bump up of our revenues from FY24 to 25. So obviously, we are all been very clear that FY26 is not going to be in the background of FY25, and we should look at our business in the context of FY24 and so on. So from that point of view, I think one of the main reasons why the Q1 was behind our plan was, some of the POs that got shifted, because one of the big business that we were about to log was this BSNL expansion of from the 100,000 sites to the next phase of expansion, and we were expecting to close the PO and shipment of another 18,000 sites, add-on sites, and that got delayed a bit. Plus, a few other customer shipments got a bit delayed because of inventory and clearances. So in a way, yes, this is a one-off quarter where things got pushed out more than anything else, and we should be able to see the results, the catch-up of this business in Q2 and Q3. That's going to happen. The other important thing is that this year is kind of a transformational year for us, as you've seen our announcements during the last few months, where we have set up air partnerships with international companies like NEC, like Rakuten, and so on. So we are kind of setting up the company. We are investing in our business for growing our product portfolio, kind of making it complete and really cutting edge, state of the art, and also putting a lot of emphasis in our global business growth, in the international business growth. So with all these factors put together, I think we see a very strong future, business growth for us over the next, several quarters and the next few years. And it has been a kind of investment and transformation mode for us as well.
All right. Hi, Arnob, as well as Sumit. Good to have you on the show. Thanks a lot for joining in. Everyone is aware there's a big potential for the company. The problem is, when is it going to come? So let's get a couple of basic details out of the way. On growth, you're saying is still a little bit uncertain. But let's focus on the margin number. Is quarter one the rock bottom quarter and things recover from here on? In that sense, will you be EBITDA positive in the second quarter? Point number one. The other point is on receivables. It's close to around 3,500 crores, little in that vicinity. When do you see this receivable number come down? Margins and receivables. Please go ahead.
Yeah, sure. I think on margins, I think we need to look at two levels. One is at the material margin level or the gross margin level, which if you see quarter on quarter, there's been a improvement compared to the previous quarter. As we've been talking about in our past conversations and our calls as well, I think a lot of our material margin level movement gets driven by the product mix or the project mix during the quarter. And because of the lumpiness in revenue that is visible right now, I think that adds to the margin movements at the material margin level across quarters. So as we see a normalization or diversification of revenue play out for us across our customer base and projects, we should see slightly more predictable margins, both at the material margin level and at the EBITDA or EBIT level. I think beyond, if you look at beyond material margin, a lot of our costs are fixed in nature. So if you see, a lot of it is employee cost and administrative expenses. if you see over the past few quarters, as the scale picked up, there was a visible improvement in profitability because of these factors. Now, as we go along, over the next few quarters and ramp up our revenue, particularly from international business, we should see the improvement in margin come through.
And receivables?
Yeah, see, receivables, I think there are 2 points to sort of highlight here. I think what you see as reported receivables are to a large extent or significantly on account of the BSNL 4G project that got executed over the past few quarters. In fact, the last quarter was the completion of the project. Now, those receivables are expected to be collected over a period of time based on certain milestones related to implementation of the project. So we should see that coming down over the next few quarters within this financial year. Also, a part of these receivables are essentially against that. We also have received an advance on this project of about 1460 crores. Now that lies in the other liabilities because some of the milestones that were to be delivered are yet to be completed. So on a net basis, I think the actual receivable number is much lower than what you see on the reported statements.
Got that, Sumit. Let's go back to Arnob because Sumit, you said something which was important. One, international orders will pick up in your overall revenue mix. And secondly, the BSNL part itself. Arnob, BSNL, it was earlier 100,000. Now it's scaled down to 18,000. For how long does BSNL continue to give you orders? Because it's been scaling down the scope of business that it's been given to other vendors as well. So that's point number one. And secondly, international, which is close to around 19% of your revenues, how much does that contribute to your revenues, say, over the next 2 to 3 years?
Yeah. So first of all, regarding BSNL, I mean, while we are actively trying to grow our business so that it is not heavily dependent on the BSNL business, but as far as the network plans are concerned, if you see, they have deployed 100,000 sites, and which is not adequate for a pan-national network. So there will be expansion in their network, and the initial phase was they were planning to do 25, 26,000 sites as an add-on, and they have come with the initial offer for 18,000 sites. But for a nationwide deployment, they will definitely need more sites, and then there is a 5G upgrade which is planned, across the country when they launch their 5G services and so on. So BSNL itself has a long roadmap to upgrading the network, with 4G and 5G and so on. So that should be a good opportunity for us. But having said that, I think our plan is not to build our own business, the complete business based on BSNL. It is a good stepping stone for building our technology and really proving it in a very tough conditions. So that's the reason why you see all our partnerships and all announcements with the NEC, with Rakuten and so on, because international markets and global operators is what our target really is. And this is the year where we want to see the results of all those efforts that have been going on.
So how much? International is 19% now. How much does that go to by the end of this year and by the end of next 3 years? What's the aspirational number here?
Yeah, so it's hard to give a number, but I would say, we certainly want to see, close to 30-40% of our business going to international as soon as possible. That would be a good milestone, and then going forward from there.
All right. Since you're speaking about TAM, this is one number you can at least give us. BSNL, BharatNet. Put it together, what is the potential TAM for you all, if you could tell us on that front? And also R&D spend, if I got the number correct, I think you're spending around 80 million. You could correct me on that number. How ready are you all to, penetrate further and take much of that TAM? So TAM, and what is the R&D spend that you're looking at from here on?
Yeah. So as far as TAM is concerned, I mean, our business is not just the BharatNet and BSNL. If you see our business, I mean, there's a lot of other India private operators where we had our historical wireline business. There are the utilities, the power, gas, rail sectors. There are the ISPs in India. And then there are the operators internationally. So just BSNL and BharatNet is a significant part of this business. So from an absolute number point of view, you can only guess that if the initial project for 100,000 sites was a certain number, I mean, it will be proportionate to that in terms of...
Give us the number, sir. Give us the number, sir. I mean, according to you, what could the rough TAM be?
Yeah, so I think the initial 100,000 site projects was what, 7,000 crores?
Yeah.
Or around 8,000 odd crores. So depending on how many sites they expand to, if it is like 20,000, if it is 50,000, if it is more than that, we have heard announcements about BSNL might need another 100,000 sites. And those are announcements that we heard. So you can calculate a TAM based on the initial number, which is like 8,000 crores for 100,000 sites. You could look at it. And, BharatNet, our addressable opportunity is only the active electronics, the routers which get into the project. Of course, the total spend on fiber, on deployment, on NOC, those are far more, but our proportion is only for the routers, which is...
What would that number be, sir?
I think the totally, it would turn out to be, maybe 1,000 crore or, a little more than that kind of a thing.
All right, we take that point. Thank you so much, Sumit and Arnob, for joining in. Your TAM would be close to 1,000 crores of the 8,000 crore opportunity that there is in the BharatNet business. But beyond that, more importantly, you're looking at improving your revenue coming in from the international business. The aspirational number here is 30 to 40%. And you do believe that margins are likely to normalize going forward. The first quarter impacted by a couple of delays, etc. as well. We will most definitely keep an eye out on how growth pans out, not in FY26, which you've called out to be a transformational year, but FY27 onwards as well as your portfolio changes. Thank you for joining in. With that, let's move